an entity, there's two real things you have to think about. Number one is how the IRS is going to view you. And number two, whether or not you're subject to personal liability. You as a person would be subject to liability such as if your company breached a contract, could they come and take your house? Or could they put a lien on your house or garnish your wages from your personal account? Those types of things when I talk about personal liability. An LLC and a corporation will protect you from that to a great degree. There are exceptions to that, which we can talk about. Maybe that's a better thing to focus on today, given that everyone's kind of formed. But in any case, so those are really the two questions. How the IRS views you and whether or not you're going to be subject to personal liability. And those are confusing for a lot of people. Number one, because the IRS doesn't care if you have an LLC. An LLC is a creature of state statute. So the IRS doesn't say, oh, you're an LLC, you get taxed this way. What you have to do as an LLC, they'll either see you as a sole proprietor. If you're a sole member LLC, it's just you, there's one owner, the IRS will deem you a sole proprietor, and your personal income or the income that you earn as a sole proprietor would be taxed by the IRS as if you were an individual. The IRS, if you have a dual member LLC, two member or more LLC, you're taxed as a partnership. That means the partners themselves are taxed. The same thing like a sole member, the partners will be taxed with their income in that way. So they don't recognize an LLC. You have to kind of opt to be recognized. You can, through the IRS, if you have an LLC, if you've talked to your accountant, you may have heard this, make what's called an S election. So you elect to be treated as a corporation, an S corp, through the IRS. And let me back up one step. So the IRS can see your LLC as a sole member, a partnership, or a corporation. If they see you as a corporation, by default, you're what's called a C corporation. And the C corporation is taxed itself as an entity, would be taxed on its earnings. And if you take a distribution as a owner of the corporation, and then the individual is taxed. So you're subject on a C corporation to double taxation. But if you're a small business, less than 100 owners in the corporation, typically, and you should talk to your accountant about this, but typically it makes sense to do what's called an S election. So the IRS treats you as a corporation, so that really, it's kind of a disregarded entity for taxation purposes, and then the individuals are taxed with the income and distributions that they take from the corporation. So that's all very complicated, and with each one of those entities, we could talk for a long time about what the tax implications are. And trust me, there's lots of good information on the internet, and it's very detailed. And I would always advise anyone starting a business to have a lawyer you can call, of course, and have an accountant that you can call. Leslie and I use an accountant, and we would be lost without it. We have what's called it's a creature of Ohio statute called a limited liability partnership, which is a combination of a partnership and a limited liability company. But then we've also, to make it more complicated, made an S election, which means the IRS treats us as an S corp, and we're taxed. Our dividends are taxed individually. So we're not subject to the corporate tax and the tax individually, not subject to double taxation. That's where the tax implication part is where you want to talk to your accountant.